Here we are at Sunday night, Monday morning, open for US futures open and Asian trading for the start of the week on the 5th of August. Today, Sunday, was a new moon, which quite often can be a turning point in the market. It certainly doesn't feel like a turning point at the moment. It feels like everything is really intense at the moment, and all of the really nasty themes in last week's ugly sell-off are just as strong as ever. If we think that a lot of this was to do with worries about expansion of the war in the Middle East, that certainly is still on the cards and hasn't happened yet. Everybody's watching and waiting for the retaliation from Iran, and everyone's a little bit nervous. Now, there was a lot of macro news last week, and none of it was bigger than the Fed on Wednesday, when they opened the door to rate cuts in September. And the market has gone from, before we went into the Fed news, the market was, some people were still talking about inflation coming back and inflation isn't over and everything could go up again. And all that talk seems to have completely disappeared now. And the concern seems to be, or bond traders at least seem to be betting big, that the Fed is making a big policy mistake and is lagging and should have cut already and are piling into bonds. Well, the Fed is always late. They always lag. They certainly lagged getting ahead of inflation, and they are probably going to be late cutting as well. But it seems like every time the Fed kind of hinted at everybody, the Fed projected, modestly 3 cuts in 2024, and the market went piling in and decided there were going to be 6 and it was going to start imminently. And so, bond traders aren't always right. I think they might be right this time. But we've gone from, the beginning of last week, a possibility of a rate cut in September, to now people are talking about double and a 50 basis points, and it being a sure thing, an 80% chance now, which might be a little bit of a swing too far too fast. It's all going to be about the jobs market. I think the weakness in the jobs market, and that's a really lagging report, has got people convinced that recession is coming and the Fed are going to have to act really quickly. So it's a really, really, the move in, for example, the bond market has been really big. And there really is a big gap now between where rates for bonds are and rates, the Fed's rate at 5.5%. So let's see, interesting times. This week in terms of news, there really isn't very much apart from the Bank of Australia, and I don't think that they're going to do very much. So there really isn't any data that's going to make up the market's mind about whether we've got imminent recession and the Fed are way too late or not either. It's just going to be one of those weeks where people are going to be watching the news, and I have a feeling that might not be too good. We are still, of course, in earnings season as well, which is not always very good. It's quite volatile at this time of year, and August isn't a very bullish month. Seasonally for Bitcoin as well, I should point out, 10 months out of 12 seasonally for Bitcoin, in Bitcoin's existence, are bullish. And there are 2 months of the year which are usually red months for Bitcoin. The first of them is August, and the biggest red month is September. Now, that this year feels kind of stronger than ever. Let's see. It feels like everything happened quite quickly as well. So I think with everything that's going on and how volatile the markets are at the moment, it's a really important time to trade carefully. Look for really good signals. Don't just not bother to put a stop in. Please be careful with leverage and trade less, not more, I think, when markets are like this, or smaller rather than larger. I saw somebody today got liquidated on a 27 million long position, like liquidated 27 million. It's nuts, this market, and you can wait. I think we will get better trading conditions. I think it's not a bad idea to trade less and smaller until conditions get a little bit better. Some professional traders absolutely thrive on this volatility. If you are not really sharp and one of them, then it is honestly better to trade less right now. So let's talk about the levels in Bitcoin and stuff that's driving them. First off, in legacy markets and in stock indexes, we've seen a really nasty gap lower in the open. Here's the NASDAQ. If I zoom out, let's look at this on the weekly chart. And if we look at the weekly chart, you can see from the low that we made in October 2022, we had pulled back and closed back above the 236 Fibonacci trace from this swing low last week, which was also a really interesting level in terms of support and resistance. It was the highs in March and it was the low pullback lows in May. So quite an interesting level for us to gap underneath tonight. And that for me means that this level now becomes resistance. If this is just one of those gap lower and we're going to fill it and continue higher, that's the level that we need to get back above at 18,506. And if we get stuck underneath 18,500, I think we are likely to continue lower. We're likely to continue lower to 17,800, which is the daily 200 moving average, and potentially the next fib support level, which is down at 16,917, basically 17,000. So, little bit of a bearish breakdown on the open. I don't usually trust, I have to say, big moves on a market open like this. I think, especially in Asian trading, that they quite often get reversed. So, but that won't happen until the US markets open, which of course we've got another 12 hours before that happens. So just trade carefully tonight. It could be that Asian markets just continue the sell-off that we saw last week in US stock indexes. Okay, so Bitcoin and ETH for me are at pretty good potential bounce levels. I have to talk though, if you're any kind of a candlestick trader, the candlestick pattern that we made last week, this big green thrust up candle, a doji, and then this horrendous bearish reversal week is quite a nasty, it's a 3-day reversal pattern on a weekly candlestick that points to more downside. And I would say that the ideal resistance level is going to be 50% back of this candle, or around where the weekly 20 moving average is. So any bounce that we see is likely to be limited to that. And if we kind of measure where that is from this low to high, that's going to put our important resistance level around 63,500 in Bitcoin if we get a bounce here. So that's what I'm going to be looking for. We go down to the daily. Let's talk about why potentially this is a bounce level. Now, from the high that we made in March to this low, this is a textbook 3-wave equal measured move. By that I mean this first swing and this second swing were equal in distance. There you go, you can see that. That's a very common in corrective patterns, and we saw a really strong bounce from it. My issue with this pattern is that sometimes when these two swings are textbook equal measured moves, like this one here, this swing here and this swing here are equal, that sometimes means, I know I talk about corrections being 3 waves, but so we're in a big upswing. So if this correction here was 3 waves, what we would normally see is a 3-wave correction like that, and then so we're in an uptrend, we do this 3-wave correction and we continue high. That's what I'm looking for. The problem is this little correction in the middle. So here's our let me draw it. Right. Here's our pullback. This 3-wave correction that we've done here in the middle sometimes doesn't look like that. Sometimes it looks like this, so it's sideways, right? And then we do that and we keep going. And sometimes it kind of doesn't do it like that. It looks like this, like a running correction, and then it keeps going. So we have our first swing, 3 waves, and next swing. And I'm a little bit worried that this kind of correction is what we might be doing in Bitcoin, and so it lasts a bit longer. So this is our first swing. This is our 3-wave V leg in the middle, and we're going to do another swing lower. So for me, unless we get back above these daily moving averages here in the middle, let's get rid of my pen here. Let's get rid of the squiggling. So for me, unless we get back above this level, unless we get back above these moving averages here in the middle, which are going to be pretty important resistance, I think that there's quite a risk that this was our first swing of correction like this, and this next swing we're doing is going to be equal, which means that's where I've drawn. If we keep going lower, that's where my pink line is, and that means continuing lower to around 53,000, and the bottom isn't in yet. And that would kind of line up with the timing that I would expect after a halving for this to play out to. So I'm being a little bit cautious. Now, I would be wrong. Listen, if we get back above these moving averages, make a lower high and keep going higher again, I'm going to be happy days, because then I'm going to be looking for a big, nice, strong 5 waves out and a breakout from this consolidation. Because whichever way we do, whether we come down here or whether we rally from here, this is all still a big corrective pattern. It's just I'm not convinced that this is over yet. So that's kind of how I'm seeing it. So I'm going to be a little bit cautious now. If this is a wave one of a new upswing and we pull back and we're just going to do a higher low and keep going higher here, I'm going to be looking on lower time frames for a bottoming pattern. So for me, that means like double bottom or something like here, a little bit of a sideways and inverted head and shoulders pattern, something like that. I think if stock indexes recover, we're going to see a really nice bounce. What I would like to see, depending on any time frame, I'm going to look for this to be, a retest of the lows that hold. Double bottom, then we break the high in the middle. That would be really good. Something to flip these moving averages, but I'm certainly not going to be piling in tonight. I think I'm going to wait and see how tomorrow plays out in the US Open, right? I think there's a little bit of a risk that Asian indexes take us a little bit lower before we get there. So pretty good. Now, let's talk about levels. If we go from the high that we made on the 29th of July last Monday, and I put this in, for me, see these swing lows. This is an hourly chart. If we get back above this 236 fib, which is at 60,200, and if we can hold above 6267, for me, that puts us back in a bigger swing to 63,600. That's that weekly level. So there's a pretty nice trade between those. And then if we get above there, I'm going to be looking for pullbacks to keep going higher. I would say both of these two levels then are key resistance. A back test of that key round number, 60,000, and above it, 63,600 next. And then I would look for a pullback. That would also be a 50% retrace. And then I would look for a pullback in a lower high. And if you wanted to wait and let somebody else do the hard work getting us up there and then buy the first pullback, I don't think that's a dumb idea either. Now, if Bitcoin can bottom here, then clearly those Bitcoin derivatives, the BSV and BCH, should bottom as well. This one's having a pretty big pullback in BSV. Remember, we were looking for a bottoming pattern in this one. Couldn't get above the 236 fib. For me, potentially we're at a quite interesting support and resistance level in BSV. I'm not going to give up on this one next, but I would say it really does need to recover those daily moving averages to give us some hope it's going up again. And BCH is going to trade like Bitcoin because of Mt. Gox. So we have got a bumpy ride ahead. Now, ETH for me is a bit of a clearer potential support level, and let's talk about why. Because ETH, first off, let's take everything off, is at the lovely weekly 50 moving average. Weekly 50 moving average is really nice support and resistance. It's done it before, absolutely quite sharp. And so it's a big deal. Also, at this 50 moving average in ETH, we are at that textbook equal measured move level. So if I measure from this high to this low, project it from this swing, you can see we're exactly equal. So these are two equal swings. That's a very common level to bounce from. My problem with ETH though is in terms of fib patterns, I think there's room for it to go a little bit lower. So I think this might be a bounce level, but unless we kind of recover and hold above 3,000, which is also an important fib level, that for me is the resistance in ETH. So I'm looking for a bounce in ETH back to 3,000. Above 3,000, I think we're going up again, but watch out for 3,000 to be resistance for another swing lower. And let's talk about why it might be going lower. So let's go back to the weekly. Let's take these. First off, this big 2,400 level where I think we might go lower to is the 50% level, pivot level, from all-time highs to all-time lows. And if we go left, we can see that it was quite an important support and resistance level here in the middle. Highs, swing lows. And so we could end up just overshooting that weekly 50 moving average and going down to that 50% level. Also, if we look at fib patterns from this high to this low, we reversed at the 786 fib level. When you do that and you break the 61.8, usually your first target is the 38.2, and that lines up with where this 50% level is. So that is also lower at 2,400 in ETH. So I think this is a really good bounce level, but I'm only going to get super bullish back above 3,000 and watch for that to be resistance. There's one more reason why I think we could go a little bit lower, down to that 2,400 level. If I measure from this low down here to this high down here, this is also the 50% retrace of this entire rally from June 2022. And one of the things I look at to see, are we going to keep going to this fib target, is what we did at previous fib levels. So this 236 fib was support, the 38.2 was support. Now we're underneath it. You can see that very clearly. And so there is, I think, potential that we don't even get to that 3,000 level, that potentially 2,800 could be resistance and we continue lower to 2,400 before we find a bottom. 2,485 in ETH dollar. So if everything gets ugly and it keeps going, I think that we could very easily see ETH continue lower to 2,400 from here. Let's take all of these lines off for one other reason. Now, the other reason why Elliott wave people will tell you, when you get a bigger correction like this, the previous swing low is usually where you come back to when you in a correction before you bottom, and that is a little bit lower than 2,200, and that's also where our weekly 200 moving average is. So whichever way you're looking at this, I think yes, this is a really good potential bottom, and it's certainly a good bounce level. But if I weigh up all of the most likelies, I think that this may just be a bounce and we may continue lower to 2,400. But a bounce week this week after this really ugly move last week wouldn't be a surprise at all, at least to start the week. When I look at some of the other altcoins, for example, let's talk about Solana. Solana's on a really interesting bounce level as well. And let's put regular candles on. We'll go to the weekly. And if I look at the levels from the lows here in Solana, from the lows again, January 2023, here's this back again at this big 38.2 fib at 132. We're right on it. And, you know, it's, again, previous lows and highs. There's a lot of support here in Solana. I think that we could very easily bounce from here. This is a very, in terms of weekly candlesticks though, this is another very nasty bearish 3 candlestick bearish reversal pattern, which points to not too much of a bounce and then continuing lower in Solana. And for me, this looks like we've had a swing lower. This is a 3-wave correction, and we have got another swing lower to come, which means if I measure this first swing in Solana, high to low, project it from this high, it points to us coming back to the weekly 50 moving average and this 50% level in the middle, if not lower. So I think that this, again, is a potential bounce level in Solana. I would look for this weekly 20 moving average, which comes in at 148 to potentially be resistance. We might get a little bit higher than that. And then another swing lower and more likely around, I don't know, 104, 108 to be support for Solana before this correction is over. Okay, let's take a look at Ripple, which had everybody's attention and was so much lovely and greener than everything else last week. Now, I was really hoping, I think this was all set. Hope, of course, is a rubbish trading strategy, but I was really hoping that we could recover this weekly 200 moving average, and it would be, we would break out, continue higher, and that we were making a really nice bottom. Unfortunately, like everything, this had a really nasty bearish reversal. Last week, we could not close above that weekly 200 moving average, and down we went. Again, this is another one where I think we've pulled back to maybe interesting bounce support. So if you were long and wrong in this one, here we are back at this daily 50 moving average. That's been really strong support and resistance previously in Ripple, and potentially an interesting bounce level if we measure from this low to high as well. It's not just the daily 50, it's a 50% retrace of this entire lovely big 5-wave rally. It doesn't look to me like we have made a 3-wave correction following this 5-wave rally, but 50% back is like a really reliable place to bounce from. So, and add that to the daily 50 moving average Ripple, also it is a really interesting place to have a bounce. Now, if you bounce from a 50% retrace, mean reverting markets tend to keep mean reverting. So the most likely thing is we are going to do 50% from this high to low. So I would expect a bounce from here in Ripple back to this 50% level, which is 0.585. And we'll see what happens there. Quite often with 50%, you'll bounce 50%, you'll pull back 50%, and then see which way you go next. You'll either 50% continue lower, or you know, you might continue higher. But for now, at least, if you have been long and wrong in Ripple, I think that we should see a pretty good bounce at this. It's a better than any other price. Like if you'd asked me up here, I would and told me you were going to reverse, I would have said this is the most likely place for the market to try a bounce. So let's see if Ripple can do that from here as well. Good luck. I will update tomorrow. Let me know if there's anything you would like me to look at. Just be careful this week. It feels, yeah, I think we should bounce, but just trade carefully. Good luck.